Our first formal relation with money starts with savings bank account, and there is no doubt that all of us starts our formal interaction with money is through savings bank. It may be our first salary or first pocket money which our parents might have put in a bank account, or any gift which we receive from our parents and relatives. So savings bank account is the first step in your financial education. This is the first interaction which we all love. Have you not remembered when you opened your first account? And because of this, in India, where we are more than 130 crores, close to 100 crores bank accounts are there. So there is a huge relation between we and our savings bank account. We are in so love with savings bank account that we have never thought that we need to look for our savings bank account alternatives, which I am going to talk to you regarding in this session. Today I'm going to discuss why we need to look for alternatives, and before that let me dive into why we think or why we have never thought of that we need to look for alternatives of saving bank account. The first obvious thing is safety and convenience. Safety is By safety, what I mean? By safety, I means that it has never crossed in our mind that the money which we have put in our bank account is going to be siphoned away by somebody else. The rules and regulations are so strict that our money in our bank account is always available for us. And second is convenience. 24 by 7, anywhere, if you are in India or abroad, you can withdraw your money from your savings bank account. The liquidity has been never been a problem. Only few cases like demonetization where we have huge problem with the liquidity. The guarantee of our money is also given by through DICGC, which is Deposit Insurance and Credit Guarantee Corporation. It is an institution which ensures that our money in bank account till the extent of 5 lakhs is secured, insured by the corporation. So in case anything happens to the bank, then till 5 lakh your value in your bank account or in your fixed deposits or recurring deposits is insured, and you will get that money in your bank account. So let me tell you then what is the problem, why we need to look at the alternative to our bank account. So the first issue or first problem with the savings bank account is the kind of interest we are getting in our bank account. Earlier, before 2011, the RBI said you should get minimum 4% in your bank account. But after 2011, it has been deregulated and it has been left over to all the banks to decide what interest they are going to give to the customers for the money they have kept in their bank account. And you will be surprised to know the kind of interest you are getting in your bank account now, especially when the rate in the economy has come down to a great extent. So let me show you what is the interest you are getting in your bank account. Just look at the rate which you are getting. In SBI you are getting 2.7%, in HDFC 3.5%, in ICICI 3.5%. Now most of the rates which you are getting here, the other important aspect which we need to understand is, guys, this is far lower. And if you compare this with the inflation which is prevailing in the market, it is close to 7%. So there is a scenario where we are getting only 2 to 3.5% in our savings account, but the inflation in the economy is much higher. So the interest rate has come down, but the inflation has gone up. It means our real rate of return on these investments is quite low, or our real rate of return is negative. Now let me define real rate of return for you. Real rate of return is the return which you get after considering the inflation which is prevailing in the economy. So the inflation is 7%, you are getting, let's say, 3% in your savings account. It means your real rate of return is negative. Okay, so we need to find that we need to put our money in avenues where we are able to match at least the inflation which is there in the economy. Otherwise, for all your future financial needs, you need to put money from your active income at future point of time also, which means that you will not be able to plan for your future financial goals, or you will not be able to invest for your future financial goals, and that will be a big problem. And why I'm sharing these aspects with you, because I am on a mission to help you in upgrading your financial aptitude. I want you to understand that in all our educational life we have been taught as how to make money, but we have been never taught how to manage money. And I am on a mission to help you in creating more money awareness for you, to helping you to increase your financial intelligence. In case you are more money aware, you can appreciate the fact that as hard you are working for the money, you can make your money work hard for you also. The only thing is you need to be aware of it. So coming back to the subject, and the other important part is the taxability. Whatever interest you are getting in your bank account beyond 10,000 rupees, any interest which you get in your bank account is taxed according to your tax slab. Okay, so suppose you have interest which you get in your bank account is say 50,000 rupees. So that 40,000 rupees additional interest which you have got after 10,000 standard deduction, that you need to add in your income and pay tax according to your tax slab. For senior citizens, this limit is 50,000 rupees. But this is a very small portion. So this will also eat away the small interest which you are getting in your bank account. So just keep this aspect in mind. Now, the other important question to answer is when I should start looking for alternative. Generally, what we do, whatever emergency fund we think is important, that we keep on our account. Is not so. So that money we keep in our bank account. But my suggestion to you is, in case you have kept 6 to 12 months of the money which you think will be necessary or required in your bank account, barring 1 to 2 months of the money which you think is sufficient, you can park the money into other avenues so that you can get little additional return. The important thing is, whenever looking for alternatives, guys, you need to keep in mind that you can't compromise on two things. First, liquidity, other safety. We need to park money at the same kind of avenues which our savings bank account is giving, that is safety and liquidity. So don't compromise on that, because this is the money we have kept for emergency purpose. So let me now share with you what are the three avenues which you need to be mindful of. The three avenues which I would like you to consider is sweep in fixed deposits, new age banks, and mutual funds. Now you may think how much more I can get. Guys, just understand this. In case you are getting in your bank account 2 to 3% and the other avenues are giving you 4.5%, then it is close to 30 to 50% more return. Don't look at absolute numbers, look at the percentage, and makes a lot of sense that you put that money into those avenues, because you are getting not only 1% but you are getting 30% more than your money which you are putting in your bank account. And do consider this, guys, your little effort will make huge difference in future. So in case you are able to get information, in case you are able to take informed decision, then you will be able to get better return. Now, how this sweep in FD works, I think most of you might be aware of it, but those who don't understand or don't know, sweep in FD is the standing instruction which you give to your bank. How it works, you can say whenever in my savings bank account the money is over and above the defined threshold, then that money can be transferred to fixed deposits. Now it is an obvious fact that whenever you are putting your money in fixed deposits, it will give you a little higher return than your savings bank account. So you can give instruction to your bank that you can transfer, say after 50,000, any additional money is there in my bank account, that can be transferred to fixed deposits. and these are very liquid also. You can transfer from your fixed deposit to your savings bank account and so on and so forth. So just consider this without any much effort, you will be able to generate little additional return. And now the other way in which you will be able to enhance interest in your savings bank account is consider new age banks which have come recently into the markets because they want to grab market share, they want money from the new investors. They are offering you better interest on your bank fixed deposits as well as in their savings bank account. Like IDFC, they are giving you 6 to 7%. Bandhan Bank, Equitas Small Finance Bank, these all banks will give you at least double of the interest which you are getting in the famous banks like SBI, HDFC, ICICI. And most of the time I get a query, show with whether my money will be safe here or not. Then again, I should revisit the fact which I told you in the beginning, which is whenever you are putting your money in either in your savings bank account or your fixed deposits or your current account or recurring fixed deposits, all these are covered under DICGC, Deposit Insurance and Credit Guaranteed Corporation has covered all your money in any of the bank till 5 lakh rupees, and with that you will be able to save your or safeguard your money. Now some of you may say, Shobit, how many banks I need to open my account? So in case only 5 lakhs is the safety. Now my answer to you is this. There is a provision in the DICGC is in case you have opened your account on your name, then you can open multiple bank accounts with the different types of account holding. So in one case you can have only you, in other case you have you and your spouse and you and your parents or you. There can be multiple of permutation and combinations, and whenever the holding changes, then all those accounts are separately covered till 5 lakh rupees. So in this way, you will be able to get additional returns also, and you will be able to reduce the risk also. So just consider this because this way you will be able to get a very good return at a lesser risk. So do consider this. This is a very good option. Now coming to the third way in which you will be able to enhance your return is investing in mutual fund schemes, only selective mutual fund schemes. Mutual fund schemes have one additional benefit. Besides giving you additional return, it will also help you in getting tax efficient return, because in mutual funds you will be able to get indexation benefit on the money which you are investing in. So let's see one by one. The first and obvious which is most popular is liquid funds. These are the funds where you can invest for any where from 1 month to 3 months time period. In case you don't require any money which you have from 1 month to 3 months, you can park in there. Here the now the companies have come with the instant liquidity facility also, in which in case you want money within few minutes at any day of the week, you will be able to get in your bank account. How to do it? In case you have opened or you have invested in liquid fund, just log into the company website or app and you can place a redemption request. But here the limit is there. What is the limit? You can withdraw in a day max of 50,000 or 90% of your investment value. So as I told you, you can withdraw either through web, either through the company app or through the website. The other way is you can also use card, like your ATM card which you get through a bank. Only Nippon Mutual Fund as of now is providing you card to withdraw the money or use for purchase like any other POS which you can do through your ATM cards. So this is the very good way to enhance your return and also get a liquidity option. Do use liquid funds in case you want to invest your money for 1 to 3 months and want to avail same kind of liquidity. The other option is ultra short term funds. Here you can park any money which you have from 3 months to 6 months time period which you don't want or you don't plan to use it. So for 3 to 6 months, you can use ultra short-term funds. The characteristics of ultra short-term fund is here. Most of the investment will be done in those portfolio which is going to mature within 1 years of time period. So average maturity, which the technical term is called, is less than a year. So the volatility in the fund is low, but here you can expect better return than the liquid funds. So you can explore this option also. Now the third, which is not very popular, is arbitrage fund. This is a fund where you get best of both the worlds. You get better tax benefit of equities, and you get safety of liquid funds. So in case you want to park any money from 6 months to longer period, you can consider arbitrage fund. Here the long term capital gain will be 10% over and above 1 lakh, just like equities, and it is a great way to reduce your tax outgo and get liquid kind of return. Okay, so you can consider this because it will have a very good tax advantage, and you will get efficient return also because you need to pay tax according to your equity taxation. So I hope this will give you a little bit idea how you can enhance the returns of your savings bank account. In case you liked it, do share with your family and friends. I would love to see your word of appreciation. It will give me encouragement to make more such kind of videos. One last thing, friends, as I told you, I am a mission to help you in getting you a better financial future. I want you to be you more money aware, up your financial intelligence. And for that, I am conducting 90 minutes free workshop in which I am going to discuss in detail how you can be your own financial planner, how you can take control of your personal finances. In case you want to join that workshop, the link is in the description. Do join me there so that we can discuss in detail how you can be your own boss, how you can be your own financial advisor. Thanks for watching. I'm going to see you next time.